Hi there, welcome to GrainTV. It's Wednesday, May 4th, a mixed day in the grain market. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn giving up 3.5 cents a bushel, beans up 6, and wheat in Chicago mostly unchanged, only losing 1/4 cent a bushel. You know, the Kansas wheat tour in day 2 finding more of what it found in day 1, which is better than average yields. After 5 stops this morning, the yield the tour participants said the yield average was 48 bushels per acre versus 35 bushels an acre for this same area last year. So overall, these rains that we got in the early or the late part of April really seem to have helped this crop. And so far, all indications from the Kansas crop tour are it's going to be a very good yield year, even with acres being off 5 million in wheat. It looks like production is going to be at least on par, if not better, than even last year's production. In other news, the Brazilian real reversed a little bit of its course from the last 2 days, gaining 0.5% in currency value. We had seen a big drop of 3% in the previous 2 days, so this was somewhat supportive for soybeans. And soybeans actually, traded a lot higher than where we closed at. We started trading somewhere in that 1030 range, but we quickly marched higher in the first half of the trading session, getting up into that 1045 range, which was a previous high. But once touching that point, we quickly turned lower, and even though we didn't close at the lows, we closed below the highs of the day, which in my mind is sort of suggesting this market may have run out of some steam without fresh fundamental news. The US dollar today was up again for 2 days in a row, not big moves, but certainly bouncing off the week-long decline that we had seen in last week's trade. And crude oil got some more bearish news in terms of EIA crude stocks. They showed inventories were up 2.7 million barrels versus last week. The expectations going into that report were only a 1.6 million barrel build. So the funny thing about crude is it sold off initially on this news, but quickly recovered by the end of the trade session, was actually trading a little bit higher. The bulls still seem to be betting on this market moving higher, but fundamentally there is more and more dialogue about where is the drop in crude stocks, where is the pickup in demand that we need to see to support mid $40 oil, or in the case of the NYMEX, $43, $44 oil, where we're trading today. And I think, fundamentally the cards are starting to stack against the bulls because we just haven't seen consistent drawdowns in inventories. In fact, we've seen only nothing but builds in inventories here of late, still record high, and with the potential for OPEC to be ramping up production. We'll find out more about their April production, but analysts expect their April production to be very high as a result of the failed Qatar summit that led to no resolution on production cuts. Let's turn our attention now to EIA ethanol numbers. These numbers were not terribly supportive for ethanol or corn. Production was off 4,000 barrels a day to 923,000 barrels, and stocks were up a whopping 500,000 barrels to 22.4. Turning back to the corn market, we showed this chart yesterday, and we talked about Dees corn trading at a really pivotal point, this 384 mark, which turns out to be the low of the day and where we last traded in the day. So that has several key indicators around that 384 mark. First of all, the trend line we have drawn off of the lows after the March 31st crop report. Secondly, the 50-day moving average coming in around 383 right now. And thirdly, even before that crop report, you can see in that period of March, 384 was sort of an underlying support. So it's acting as support now, and I'm concerned that if we break below that, then potentially we start moving lower and potentially make a run at the lows set back in April. And all indications fundamentally seem to point to really good conditions in the U.S. The Midwest seems to be dry in the forecast, getting the farmers the chance to keep planting and rolling those planters. And so I don't see much that's really going to hold us back other than this potential in Brazil with the second crops or the second season corn crop that may have some yield losses. But overall, we still have ample supplies. And with wheat in particular in the spotlight right now at their critical growing juncture, and with the tour in shape, They're finding nothing but really good signs of yield potential, which I'm concerned will drag the wheat market and in turn potentially drag the corn market down as well. So if you're concerned about prices and what you can do in your marketing situation, by all means visit us online at GrainHedge.com to take a free demo of our futures trading platform, as well as get our morning comments and our technical alerts. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at GrainHedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at GrainHedge.com or by phone at 877-472-4607.